back with another Monday. It is Monday, June 24th. And as we always do, we want to start on the monthly chart, zooming out so we can help maintain that bit of perspective here. And as we can see on the monthly chart, we are in that larger breakout, right? We have a 3-month balance down here. We're getting that breakout. We did have a contract rollover, so you can see I have marked some of these gaps, the back adjusted gap and the regular gap, right? Just depending upon what most people are monitoring. My charts are all on back adjusted. So if you're seeing some levels on my chart that you're not seeing on your chart, that's probably why. I think those are probably the levels that most people are tracking, but nevertheless, decent to look at those. We can see the monthly here developing as a +4. The only thing that's really going to change that is if the market were to close by Friday down below this 52.95. So a pretty decent move the market would have to move. You could see here the market would have to move about 5% down this week. So not an impossible task, but I guess not really super likely either. Switching over to the weekly, you can see the weekly closed last week as a +4. So we got that breakout bar and then the +4. This close here being a very important one should the market catch an offer, that 54.34. It's about 100 points lower than where we're at now. Could still be a viable pullback for the market. So definitely something still to be paying attention to. See the gaps here. And then the theme or the title of the video today is how to see divergence on the chart. And we can see it here with that weekly being a +4 close, indicating that the momentum is still moving to the upside. But we get a daily -4 close here. And that is telling us that short time frame traders, or at least in the short time frame, we're seeing some bearish sentiment or some shorts trying to come in and possibly take the market lower. And so the key thing here is that we want to be paying attention to is, are we going to stay above or below that close from Friday? And that close from Friday being a weekly and a daily close of 55.34 quarter will be kind of our pivot point today and give us, some real insight to, is the market going to try to continue up, or are we going to get a little bit deeper of a pullback? Now, one thing I do want to keep reiterating is the market is still in a longer term uptrend. Like I said, even a pullback all the way to that 52, what was it, 52.95 level that we saw on the monthly, you're still looking at a market breaking out of a balance. So there's nothing really to get super worried about. But if you are day trading like we are here, you want to be kind of noticing these things. So we get a little bit of divergence. So today, the key will be to try to determine, are they going to squeeze these short time frame traders? And you can see we did get a wick to the downside on Friday with a close basically right in the middle. So really an indecision bar. And we have the high from Friday sitting at 55.45, excuse me. And the close from that previous day, 55.44. So you do have a very mechanical high, or a weak high, we would call it. And that is continuing into the Globex session. As we look over to the profiles here, we can see that on the profiles, right? You can see the close. Well, I don't have it marked, but close here, and then also the Globex high kind of sitting right off that. So indicating some weakness from buyers here in back-to-back sessions. So we just got to pay attention to that. Today, I really think the key is going to be this -4 settle, +4 weekly close, that 55.34 quarter. Should we get back above it, I think we do, have the opportunity to catch a decent long in there. There is a possibility, right? If we don't take this area here and the market just can't find the buyers at the high, that this thing could fade back down back towards this settle. So we've got to be kind of paying attention to that level and really kind of keying in on the price action once it gets there. Right now, obviously not very important as we're trading below the settle. The market is relatively in a kind of neutral ish zone below that 55 quarter. I think we start to get a little bit more bearish, and the opportunity for the market to come down increases. It'll be looking to kind of fill these singles, and then the level below being that if it fills the singles, you've got a level below at 5504. That would be that target to the downside. Now you could see a break up out of this chop zone as well. So we've got to be careful, right? Moves down here and some buyers show up because we have previous excess here. Could see some buyers that bring the market back up to the settle, and then that would be representation of a little bit of balance. Now remember, the market can break either side and then still return, so you've got to be paying attention to that, right? If it breaks this weak high, fails to hold and drifts back in, well, then we go back to this play here. If we break this low, fail to fill the singles, get back in, well, then we look for it to revert back to the settle. This also happens to be the current COT VPOC, so that's something to pay attention to. And then the previous COT VPOC sitting up there, 55.45, also with some single prints up there, so a little bit of liquidity and a separate distribution on the upside. And that'll be kind of a decision zone up here at the high. Some key things that I'm kind of keying into as well is that we are seeing a little bit of news come out that's saying people are adjusting their targets higher. And so when we get this, a lot of times you get this kind of continuation look. A lot of times when they start to adjust these price targets, like all of these people that are forecasters or economists, they say, at the beginning of the year, their price target for the ES was 5,500. Well, now we're at 5,500, so they're forced to adjust, and right now they're adjusting higher, jumping it up to just 56 when we're only halfway through the year doesn't really seem super bullish. And so one thing that I'm really kind of keying into is that as we've gotten to this high, you can see we really developed this P shape here. And you know what I'll do is I'll just go ahead and drag over the COT chart for the ES. Let me detach this. Okay, so we can see the COT charts here. So this is the previous COT. This is the T2 COT, and then this is the current COT. But what we can kind of see here, we get this move from the previous COT is a P shape, right? Short covering comes in, forms a P. The market gaps up and then forms another P, right? But with a gap. Remember, gaps are excess. And then we form another P. So short covering continues, and you can see the short covering continues, but now we're kind of leaking into a little bit of a liquidation. So we're finally seeing these buyers step off the gas and giving shorts an opportunity to get out of the market. And you can see where this low is really just filled back into this lower distribution, which is kind of the key for the market to stay above, and that's that 55.20, right? Like I said, a break of that low and a return would bring us back to the POC. But if we break below this, that target 5501, I have mine at 5504, same level basically, but that's kind of that move down, and you get that kind of continuation and probably another B shape relatively in this distribution, and then we look for it to kind of confirm above the 5500 or really fail below that 5585, and then that would be a test of this previous gap or the COT gap. But other than that, that is pretty much it. Remember, it's summertime, so there's no point to try to force anything. It probably be a slow market, even though we have got decent volume on the days where we've had full days. We've had a lot of holidays so far, and that's kind of throwing things off a little bit. But right, Friday we had over 1 million volume. Thursday we had over 1 million volume. So for the most part, we're putting in decent volume, so that's definitely something we want to be paying attention to. And then you can see that untouched VPOC 5488, so that'd be another level to kind of pay attention to should we get below that 5501. Yeah, other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. And I'll see you guys tomorrow.
What up, B?